I didn't realize it was Kevin Bacon getting spanked in Animal House, and he couldn't perform bodily functions to take care of himself. But one day, it's Thursday, February 6th, 2025, and this is the week in charts. Obviously, I want to thank all you guys and girls for attending tonight. I appreciate you taking time out of your busy schedule. If you're watching the recording of this on YouTube and you want to watch it live, davelandry.com/webinar. Also, if you would prefer me, I'm kind of toying with the idea of bringing the shows back to the day. It seems like during the daytime, we had a lot more people, and during the daytime, a lot of people said, hey, Dave, could you do it at night? So I've been doing it at night for quite some time. And I was also kind of getting really busy with the markets during the day. But I don't know. Y'all let me know what you think and what you want, and I'll be happy to see if I can accommodate. All right, we're going to talk about current market conditions. Obviously, your questions on trading, you can just type those in as we go or as they relate to the slides, and we'll get to them eventually. I should have plenty of time to get to everything. I'm going to spend some time on the methodology in action. Not a tremendous amount of time this week. I'm talking a little bit about trading psychology as it relates to this methodology and really any other methodology. And then we're going to continue the 25 trading resolutions. We're now on part 3 of those. There's a disclaimer screen. As you know, you can lose money trading, or as I often preach, all predictions are about the future, and a lot of stuff can happen between now and then. And that's from my buddy Greg Morse. So there's all the contact information. If you're watching on YouTube, obviously grab yourself a screenshot of that if you need to get in touch with me, or you can email me directly, dave@davelandry.com. All right, let's talk about the mystery charts and the methodology in action. No mystery charts this week, but I did want to touch upon Mind the Trade. And I think that's a series I started a couple of years ago with stock charts for a while as part of the Trading Simplified show. But anyway, I thought it would dovetail nicely into tonight's presentation. So this post was on January 30th. KGS way down and after hours, gonna hurt. And I like what John said. It's down a couple of points pre-market. Luckily, not an SGMO. SGMO, we got absolutely creamed on a while back. And it sucks, to put it mildly. It comes with the territory. It happens, or shit happens. Might as well demonetize, get that out the way right now. Now, my answer was, I hear you, but if you focus too much on the zigs and zags, you put yourself into many states of regret, which we'll get into in just 1 second. Discipline gets worn down. Amen. And I read that from a book by Scott Adams, and I've seen it elsewhere since. But it's like you have plenty of discipline, but then it wears out as the day wears on. Or let's say you're dieting and you do really, really well for a whole week, and then all of a sudden just the shit hits a fan and it blows up. That's very typical, and that has to deal with the discipline cycle and emotions getting used up, and the discipline more specifically getting used up. And as likely know, a negative observation is twice the impact of a positive one. We'll get to that too. So negative observations could eat away at your discipline, and it does. You have to go in saying, this is my risk, I can handle it, and if I get stopped out, I might drop an F-bomb, but I'll be just fine. So the point I was making with this, and so far it really hasn't worked out to my liking, obviously, for this presentation, but let's just see what happens and let the chips fall where they may. So he was right. It did get whacked in after hours. Not a tremendous spanking. I've seen much worse, believe me, not that long ago. The thing I was thinking about, though, is if this stock does rally above that new closing high where it was, if it goes on to make a new closing high, then you wasted some mental energy. And as I used to say quite a bit, especially when I lived out in the country, I would look at my position trades, mostly from like the core trading service, and they would all be down on a day, or most would be down on a day, and I'd get pissed off and drop some MEP funds and such, and then walk around the block. And in the country, it was roughly 2 miles, 1.7 miles, or maybe 2 miles, depending on what track I took. But the block we lived on was about nearly 2 miles around. And by the time I get back all hot and sweaty and aggravated, not every time, but many, many times, the stocks all came back, and they were actually in plus, and sometimes quite nicely. So it made me realize that I was wasting a lot of energy watching every zig and zag. Now, I looked it up, and there's a little bit about this in fact, they actually reference this, I think, Thinking Fast and Slow by Kinnerman, and it's not Thaler, but Thaler's done some really good writing on this too. He's pretty good when it comes to this behavioral psychology stuff. But there's a word for it, and actually neurologists have proven this too. It's not just a psychology, but there's a neurology behind it. And it's called negative potency. The principle of negative potency, easy for me to say, asserts that given inverse negative and positive events of equal objective magnitude, market goes down 1 point, the market comes back 1 point, okay? The negative event is subjectively more potent and of higher salience than its positive counterpart. More generally, the claim is that the negative events are more potent with respect to their objective magnitude than or positive events. And I've often say it's 2 to 1. I think Craig, who's usually here on Thursday, one of my clients, been a client forever, I think he said it's more like 10 to 1 or whatever. So I'm not sure exactly what it is, but it's a lot. And that's what creates the gambler's ruin, okay? So you make a little money gambling, it feels good, and then you lose some and it feels really, 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 really bad. And like I told my wife once years ago, I had like a dinghy from a boat that I'd sold, and we sold the dinghy, and I said, hey, let's take $1,000, or no, it was only $200. Let's take $200 from the sale and let's go parlay it into $1,000 or so. And she's like, all right, she was game. And so we went to the casino, and believe it or not, we turned into about $1,000 or so shooting craps, maybe $1,400. But anyway, somewhere around that. It was a really good, decent little amount of money, a lot of fun out, free drinks and whole 9 yards, nice dinner. And then on the way home the next day, I said, this is probably the most expensive trip we've made to the casino. She's never been to the casinos over on the coast, Mississippi coast. She's like, why? I said, well, because we were one, and you're going to want to go back. And then I didn't get into all the gambler's ruin or whatever, but that is a big part of it. And you end up chasing that high. And trading is no different. You got to be really, really careful. Now, this is an example that I found that was part of the resolutions that I did. And I'll show you this one in just 1 second again. And I thought this was kind of a cool example to show because it rallied up and hit the initial profit target. That's this little green line in here. And by the way, anytime you see these little snippets from trades in here, these come, I use it myself. I go directly to davelandry.com/archives and I pull these older trades out of there. So I could see, okay, where was my entry? Where was the stop? Where was the initial profit target, and so on and so forth. So I don't have the labels in here, but this was the entry, this was a stop, this was the initial profit target, and this was the risk, and the pattern was an IPO first pullback. So I thought it'd be interesting to map out the ups and downs. And so let's let the up be 1 and the down be -2. Now, what I didn't do was I didn't exactly map out the magnitude of the moves. And that's what they were saying earlier. It has to be of equal magnitude. But if that number is bigger than -2, like we said earlier, I think Craig was saying, then this really doesn't matter. But for illustrative purposes, this kind of gives you the idea. So I mapped them all out and spreadsheeted it. And on the up days, I gave a +1, and on the down days, I gave a -2. So that was that little range we just saw. Now, this stock went up and hit the initial profit target. Okay, remember, once we get to the initial profit target, we move the stop to break even. So had it stopped out on the remainder, overall, it'd have been a decent trade, 1% overall. And the hypothetical 100K account, so that'd be $1,000. Okay, and I actually do take the trades. So that'd have been a real, for me, it was a real $1,000 in this particular case. But anyway, you could see that that one little section of trading, because it just kind of went sideways and zigged and zagged, actually created a lot of this negative feelings. In fact, if you plot out a lot of these things in trading, overall it's a net negative. And that's something that's really hard to manage unless you really want to manage it. Very important to deal with. Now, keep in mind that this was a profitable trade. It was about to get more profitable. Now, the reason I say about to get more profitable is because it took off from this low. Now, I don't want to pull my clients. I don't want to upset them, but I'd be willing to bet a lot of people gave up during this zig and zag. And I could probably go back and look at my emails from this period of time, and I'd be willing to bet that people say, well, Dave, it's dead money. It looks like it's going back to where we started. Might as well get out. But then it had a pretty good run since, and that turned into a big winner. This is a multi-year winner starting in 1 year and going into the next, starting in 2023 and then finishing up in the middle of 2024. By the way, that's the ultimate goal, to get into these trades and hold them for as long as possible. And I'll come back to that one in just 1 second. Now, how do you live with the ups and downs? Well, you have to accept the outcome going into the trade. And we're going to get into this when we get into resolutions. But you have to be willing to accept the outcome, good, bad, and indifferent. Now, you have to say it's worth the risk. If I don't take this, F yeah. And by the way, when you're looking at a trade, you should feel like F yeah. You should have that gut feeling like, hey, I'd be stupid not to take this trade. So if I don't take this F yeah trade, I'd be angry, and I'd be angry if it took off without me, okay? So that fear of missing out is so painful, and I call it the pain of missing out, okay, POMO, because there's been a few that I should have taken throughout my career, and I think about them every now and then. As I've said before, I'll ride by the marina, whatever, my bike, and I was like, oh man, that trade that I didn't take, that TLRY that went up to 1,000, and it was a perfect setup. I don't know why I didn't take it. It's like it just doesn't go away. So that's a very painful part of trading. I'm kind of sidetracked on that. But if you go into it and say, this is an FEX setup, and I know my risk, and I think it's worth it, if I get stopped out, so be it. There'll be other ones along the lines. Now, conversely, you might think, I don't think it's worth putting money into harm's way. I don't care if it takes off without me. Now, I do understand this gentleman that posted that earlier. He's in a situation where he's outside of the States, and I'm guessing his wife works there. Otherwise, I'm not sure why he'd be living there. And he's not allowed by law to work. So I think that creates the extraneous influence. I think the extraneous influence is huge on him, and it's very hard to take these losses. So, I'm just kind of, what's the word? Embellishing, right? His wife comes home and I worked hard today, made some money. What'd you do? Oh, well, we lost money overnight, and I'm just guessing that's how he must feel, because I feel that way quite often. Anyway, I was looking for some quotes from Douglas. There was specific quotes about if there's any animosity after you take the trade, then obviously you haven't accepted the risk. And I couldn't find it in the books, but I think that was in one. John Ross, you had to bring up TLRY again, didn't you? Yeah, I know. It kills me. I would have bought at least, and I'm thinking just in one account, I'd have bought at least 1,000 shares. And it's just I'd have taken some profits along the way, and shoulda, coulda, woulda. But what would the world be without hypothetical questions? Said Mr. Wright. But it's like, damn, and that's what we live for. Why? I don't know. I have no idea. And if it wasn't so damn painful, I would go in and watch a service on that day. And I don't know what I said, and I probably need to go back and look at that. But anyway, I found this from Douglas, which was pretty good, which was trading in the zone. I like the Disciplined Trader better just because it was the first one, I guess, and I was struggling a lot more when I read that. But Trading in the Zone is worth reading, and anything by Douglas is really good. And the Fully Acceptance of Risks came from some YouTubes on, and there's a lot of really good YouTubes out there. Mr. Douglas is no longer with us, unfortunately. As I said before, I only met him briefly, so to speak, on the phone, and we were supposed to be put together on a project from a third party, and it never did materialize. And that's really a bummer, because I wish I'd have gotten to know him anyway, because he seemed like a nice guy. Anyway, there's a huge psychological gap between assuming you are a risk taker because you put on trades and fully accepting the risk inherent in each trade. When you fully accept the risk, it will have profound implications on your bottom line performance. So you have to decide, okay, is this an FER trade? Is it worth it? Okay, or not? Okay, Brian said earlier, right before we went live, hi Dave, I'm so lost. The market is so choppy, it might as well be flipping a coin. Well, it is, okay? And I don't use ADX, and I put a little emphasis on ADX in the first book, and that was kind of by accident. I knew I was encouraged to show people ways to kind of mechanize things a little bit. And I used ADX a little bit back then for scans. I also just looked at a lot of charts like I do today. But I did plot the ADX on the S&P, and it's fairly low right now. But you don't need to plot that. And if you go back a few presentations where I drew the little zigs and zags in the S&P, and it's absolutely all over the place. And just like you can't catch a tan when the sun isn't shining, you can't catch a trend when there is none. And I'm in the shower once again thinking, I guess the things you think about in the shower change as you get older. But I'm thinking it's kind of like, I'm thinking about the questions that might be coming soon from the wife. It's like, well, when is it going to get better? When can we expect to pull some money out of the market? And we got taxes due. We've got this going on. It's like, like I say, it seems like every time I walk in the house, I'm always getting hit with something. So he goes on to say, he says, how do you select a stock and have such conviction in this environment? Well, that was one of hardly any stocks, okay? I go days and days and days and days and days, and then it's like, you know what? I think this is worth a shot, okay? And if you go back and look at the chart, which we can in a second, I'll show you everything I liked in the chart, okay? And that's how I selected that stock. But if you look at my trading service, and then late last year, I think I did a presentation where somebody said, hey, Dave, 5 trades in 6 months. I'm not too impressed. Well, it was 5 good trades for the most part, 5 or 6. And I think 5 out of 6 worked. And it's like, well, given the environment, I know the market went up. That's the worst market for a trend follower, a market that goes up like this, especially if it does that somewhere in between. Really hard for a trend follower to do well. Buy and hold looks like a genius when that happens, okay? So how do I have so much conviction? Well, if you could tick off all the boxes, in this particular case, the sector wasn't really there 100% and the market wasn't there 100%. It was an energy stock, so I'm not as worried about the market. But I was seeing some improvement here and there in the energies, and the underlying commodity was doing a little better, so I figured it was worth a shot. But keep in mind, that's one trade out of many, 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 many days of waiting. So hopefully that answers your question. The best thing to do is to just sit on your hands in this environment for the most part, okay? But if you go in and you take one trade, it's the first trade, I don't remember how many days it's been or how many weeks or months it's been since I had a recommendation. But if you go in and take that one trade and it fails miserably, well, you're kind of still sitting in your hands mode. It's not like you're going crazy with it, but that's what happens is sometimes the market is still really choppy and you see a setup you like. It's like, you know what? I'm just going to go ahead and take this, and it works out. And before you know it, you're a little early to the game because you got in while the market was still choppy, but the setup was there, okay? And then before you know it, another setup shows up, another setup shows up, and so on and so forth. And sometimes a bull and bear market, sometimes you'll start taking the shorts, and then all of a sudden the market begins to roll over, and you get more and more and more, and you get paid off. And the same thing happens, obviously, on the upside. Okay, I'm going to do a quick TFM 10% update, I promise, this week. So the zones are based on percent away from the 50-week closing high. So 0% means we're hitting 50-week closing highs. You can see 2 weeks ago, I guess 3 weeks ago, as of tomorrow, we closed at a 50-week closing high. And then you go back a few months to early December, and you see we closed at a 50-week closing high there. As long as you're in the green zone, you're within 5%. Jeff, who's here tonight, inspired me to add that green zone in there. He likes to get out when it's 5% or more away, plus some other rules that he has too on that, I believe. And then if it's in the light pink zone, it's more than 5% away, and then 10% is part of the sell signal. And my thinking is, if a market is going to drop 50%, technical analysis 101, right? It's going to drop 10% first. So if it's going to drop 50%, it's going to drop 10% first. So 10% in markets, not necessarily all markets, because some markets will bounce around quite a bit. But I was fairly shocked that it did fairly well in Bitcoin, and that's because I had the 50-week moving average in there. So that's a sell signal. Last sell signal was way back in November of 2023. And then it got long 2 weeks after that. and it's been long ever since. Now, the sell signal is a close 10% or more away from the 50-week closing high. So anywhere in this hot pink zone, which looks like 54.91-ish, somewhere in there, 54, hard to read, but whatever that is right there, and a close below the moving average. Well, the moving average is up here, so now you use this zone because it would be a close below both. So that's where your sell would be. And the designer's intent, as I often say, with this was to avoid the so-called, as Ian McActivey used to call them, God rest his soul. He was a great guy. I don't want to go off on a tangent on him, but he was awesome. Funniest speaker I've ever seen. I wish I could have been around him more and learned more. He just had the best. He had memes before anybody knew they were called memes. Anyway, he used to call it the diaper change moment, talking about these world economic events that happen and market crashes or whatever. And I just thought that was a great term. So the system is designed to avoid the diaper change moments. As I said quite a bit a while back, and that a while back was 2023. Wow, it was 2023. Holy crap, I didn't even realize that. I'm kind of seeing this as I'm showing it to you. But in 2023, there was a signal in the Qs, and I did a quick back test, and I said, you know, it looks like it works as well in the Qs as it does in the Ps, and might as well give it a shot. 100 shares, who cares? Well, it actually turned into real money, which was kind of surprising to me. So the sell signal is at the 10% line, which is also at that 50-week simple moving average. The 50-week simple moving average is a whipsaw filter, and that's just to keep you from chasing your tail too much. Anyway, I got in at 319.49. I showed the actual trade before, so I won't bore you with that. But when it stops out one day, I'll show it to you again. So it's a $208.87 gain, 65% run. I never dreamed it would go that far, but it's provided a lot of good examples on what longer term trend following is all about. Remember, in the core methodology, we're trading like a swing trader, more like a swing trader, right? The setup is bigger picture, looks like it has longer term potential, but we can take a swing trade profit out just in case the longer term trend does not materialize, okay? And this is just a mechanical type of system where you're just, and again, the original intent was to get out of the market, but it looks like it does a pretty good job of getting you back in with the little whipsaw filters of the daylight and all, or Landry lights, I now call it. But anyway, so it's been a pretty good run, 65%, and now it's turning into real money. It's 20,887. The other thing too, it's kind of interesting, is that's $53,000 in this one position, and it's something that I just really didn't think about it when I put it on, but it's actually become real money. So anyway, go in and watch older presentations if you can't sleep at night, and a lot of them I show the drawdowns and the nuances of the longer term trend following. I want to hold the position for at least 10 years when I get into it, hopefully much longer, but obviously I often get stopped out much quicker than that. So I want to be in the markets forever, and I'm slotted as a short-term trader, but I will hold positions for a long, long time. And like, as I'm grabbing some of these examples, I'm like, well, this is examples from 2023, but yeah, I held it for a year and a half. So it's like, I think it's still relevant. That's the ultimate goal. Anyway, one of my experiments, which I did years ago, and I started up, I think in May of last year, was the Landry 100. And all I'm doing, and I'll give you the formula if you want, is I'm buying a new closing high, a new 52-week closing high. And as I've said ad nauseum, if the market gets worse than it is now, for instance, I'll back that down to maybe a 6-month high or even a 90-day high. But for now, I'm finding plenty of stocks to fill this list. And all of these are bought at brand new highs. So that was bought on 9/11/24, and you could see that it was making brand new 52-week highs back here, and it's had a pretty good run, 285%. It was up over 300% over here. There's no money management in this. I am experimenting a little bit with some of this, just for S&Gs. So far, it's failed miserably, so let's not get too excited. But what I am doing there is I am taking partial profits at 100%. And I had one recently make like an 80% profit, and then it imploded overnight. So that kind of sucked. And that just comes with the territory, and that's what momentum trading is all about. And this is the great thing about this experiment is, well, one, it shows me hot stocks. Two, it kind of guarantees, so to speak, I'm in those hot stocks, which is kind of fun. Even if I'm not always in them with real money, at least they're on the radar, okay? But it also fleshes out a lot of the nuances of momentum, and that momentum ends badly. And I'm trying to think of his name. Wish I'd have thought of it before on the fly. I can't think of it, but Mike Moody gave a really good presentation a couple of years ago. Might have been 10 years ago, at the American Association of Professional Technical Analysts meeting. And I said, Mike, this momentum thing, I love it, but it ends badly. Anything you could do about that? And he's kind of a laid back kind of guy. He's like, Dave, if you're gonna have a baby, you're gonna have a lot of baby poop. Babies are great, don't get me wrong, but you're gonna have a lot of baby poop. And it's like, well, we got a puppy now, and now I've got little cuts all over me, My wife went to do some blood work, and she was telling the nurse, like, I swear I'm not on meth, all these, sores all over me and everything. So you're gonna have a lot of puppy bites, but you're gonna have a lot of, puppies are wonderful, right? Keep you up at night, but that's one of the features. But anyway, if you're gonna trade momentum, you're gonna have a lot of baby poop. It just happens. One thing I noticed is that, which is kind of cool from a nerd standpoint, is that this momentum list, and I noticed this many years ago, especially back then when I had tracking software, it tracked a lot better, so I could see the entire list change over a day as opposed to just kind of eyeballing it like I do now. But anyway, it would just get absolutely creamed, and sometimes the market would be making new highs, and I'm like, well, what's going on here? And 2 or 3 days later, the market would get creamed. So this momentum would get hit first, and I think there's some fodder for research there. There's only so many hours in a day, but I'd love to explore that further, and that's something you guys want to experiment with. Please let me know. I do make this list public on demand to my people in the Facebook group, and sometimes I'll just randomly throw it out there if it's been about a week or so. But if you're not in the Facebook group, which you have to be a member of daylearner.com, I'll give you a copy occasionally if you need it. Just let me know. Anyway, so they're all about at brand new highs, and the numbers are pretty impressive here. Now keep in mind that this thing goes through constant window dressing, so to speak. So I'm constantly putting new stocks in here that look fantastic and kicking the old ones out, and I'm running it like you should run your business with employees, okay? Like I said last week, and probably ad nauseum before that, you've got 3 employees that are busting their ass and 1 employee that's sitting on his ass. Who are you going to get rid of? Well, you're not going to say, yeah, this guy over here is sitting on his ass. He's bound to start working someday soon. So I'm just going to keep him around. And, this girl over here or guy over here has been really busting his or her ass. She's bound to burn out soon. So I better just can her right away and then wait for this guy to kick in, which any minute now he's going to kick in. It's like, well, even ludicrous would say that's ludicrous, right? So that's how you have to run your fantasy football team, something I've never done because I'm so obsessed about things, so obsessed that when I get into something, it would probably kill all my time. That's why when somebody asked me if I want to be in a team, I'm like, no, thank you. Anyway, so you have to run your portfolio. And years ago, somebody emailed me and they switch flip with them. And I wish I knew their name. I can't remember it off the top of my head. But they were saying that they were treating their stocks like children, sorry, not employees. And with a child, anything short of mass murder, you're gonna stick with that child and not give up on that child, right? And on the other hand, he said he's gonna start treating his stocks more like employees, and when they're not performing, he's gonna kick them out. So lately, we've been doing a series on 25 trading resolutions for 2025. And beyond. If you have some resolutions that you made for trading, leave them in the comments below if you're watching this on YouTube or if you're watching the video of this. And I'd love to know what yours are. And by the way, and somewhere along the line, I think I talked about this a little bit last week and weeks prior, and maybe in one of the resolutions coming up is if you want to make a big change in your life, make a small change, okay? we have a homeostasis about us, if that's the right word. You know, what's the temperature? 98, our internal temperature is 98.6 or whatever it is. You know, that goes up a few degrees or down a few degrees. It's not really good for us. Okay, we have to maintain this homeostasis, and it's like all these people with the diets. I mean, I know a couple that are out there on their third diet of the year or whatever, and it's like they go on these crazy fad diets, and they end up fatter than when they started, and that's just because they try to make too big of a change. Robert Maurer, he's got a couple of books. One of them is Mastering Fear, which is pretty good, but the other one was Kaizen Way, which is even better. And he talks a lot about that. And I saw him speak at a conference I was speaking at probably 10 years ago. And he said something really interesting. He talked about like a client who couldn't lose weight, okay? And she's been to all the doctors and tried all the different things, and and just absolutely couldn't lose weight. And then he says, I tell you what, he says, what do you like to do? She goes, wow, watch a lot of TV. He's like, okay, that's fine, fine. I want you to do me a favor. Tonight, when you're home, I want you to just stand during one of the commercials. And I want you to do that for a week. Just doing one of the commercials, I want you to stand up, okay? And then next week, he's like, I want you to stand up doing all the commercials, okay? And before long, she was standing there watching TV, waiting for the commercials in. She started marching while she watched TV, okay? And then that led to her walking outside, which led to her running. And I think she ended up running marathons eventually from such a small change. Now, let's say she ran out and tried to run a marathon day one, then obviously that wouldn't work. She'd be so sore she'd never go anywhere. We had not to get too far sidetracked, but and I thank them for this. I'm so glad they got me back into working out. A couple of buddies, a friend just around the corner, he has a bonus room he turned into a weight room, and they invited me to work out with him. And then that same cocktail party we were there, one of the guys like, yeah, I worked out once with him and I'm one and done, and he couldn't perform bodily functions to take care of himself. He was so sore the next day. And I don't know whether it's literally or figuratively. I didn't want to ask any questions, but that was like an aha moment for me. It's like, Dave, I know you worked out years ago, but that was many, many years ago. You know, like I used to joke about my annual workout. And so I took it what I thought was super easy. And the next day I was sore AF, but then I kept going back day after day after day. And you know, it was kind of fun because there's a lot of jaw jacking happening. You know, if you didn't show up, they'd be like, what are you doing? And you know, guys are brutal, believe me. Women like, why can't you just treat us like one of the guys? It's like, really? Is that what you want? I don't think so. And Marcy, my wife, she's always like, why are you so mean to each other? I'm like, that's what guys do, you know? But anyway, that got me into working out. I kind of eased my way into it. And we're no longer working out there, but I've joined a gym since, and I rarely miss a day. Market holidays I take off. And and I know myself, if I take one day off, I'll take 2 days off, I'll take the week off, I'll take the month off, and I'm done. Anyway, I wanted to, getting back to this long story endless, imagine that, me going off on a tangent. I wanted to revisit the number 10 because I found some of these slides that went with the resolutions from a couple years back. And you don't want to micromanage your trades. And if you look at a trade like this, you could see there were a lot of zigs and zags along the way, and it would have been very easy to exit the trade. And if you look at the Q trade, and you go back, the trade in the Qs, you go back on my YouTube channel, you'll see that there was an $8,000 drawdown in that trade. Well, that's the baby poop, right? Mike Moody's, the way he talks about the baby poop, and that's the baby poop of momentum trading, right? Just comes with the territory. The drawdowns are abysmal with a longer term trend following, and that's why we use the hybrid money management approach with this. Take the partial profits and trail the stop and let things open up, etc. But you could see in this particular trade, in a lot of presentations I'll show what that drawdown was on each one of those zigs and zags. And then the other thing too, like Brian was alluding to, the market's been so choppy, it's all over the place. Well, it's very hard to sit in a position in a choppy market, but if that's what you're supposed to do, that's what you're supposed to do. So be careful not to micromanage yourself. out of trades. This is the K and F example we're talking about earlier. And you can see that that's where it stopped out there. Now, if our stop was just a little wider, and who knows, right? That could have easily been the top. It looked like it topped out. But if the stop was a little wider, the stock almost doubled from there, which would have been kind of cool. But anyway, lots of zigs and zags along the way in these, and you could easily micromanage yourself out. It's probably been 20 years, maybe even longer. But I do remember we triggered into a stock and it just absolutely flatlined for like, I forget how many days. I was shocked it went so long. But as you'll see in a second, it's kind of like enjoy the process. I'm like, okay, well, let's make this a game. Let's see how long I can stick with you, even though you're going absolutely sideways. Well, the damn thing got bought out. And a lot of people during that 20 or 40 or 50 days or whatever, where it just went sideways after triggering, they got out. They got impatient. They micromanaged themselves out. So you have to, as I told somebody once, in for a penny, in for a pound, let the chips fall where they may. All right, number 11. I will seek excitement and entertainment outside of the market. Okay. You want some excitement? Go to Vegas. Okay. At least a pretty girl will bring you a drink, while you lose your money, right? Or have an affair. That way you only lose half of your money, as I often joke. You probably don't want to have an affair. It's going to be, please don't have an affair if you're a client. I lose a lot of clients to divorce. Shit, I guess there's a 50-50 chance I'm going to lose a client. So one thing I was thinking about and writing a lot about lately, I wake up every morning and write. I write my morning pages, which is 3 handwritten pages. I'd recommend everybody do that. I've beaten the dead horse on this. That should probably be a resolution. I'm sure it is. I have to dig them all out, but I think that's one of them. But one thing I've been writing about lately is it kind of seems like it contradicts the process thing we talk about in a second, but it actually, the two actually work together. But never forget that the only reason to ever put on a trade is to make money. I overtrade way too much. I'm getting better again. This choppy market has really slapped me in the face, like getting hit in the head with a halibut. Again, I have to relive this process again through choppy markets. Now, I'm not doing anything position-wise because I've been working so hard, so long on that core trading, that position trading, the swing to intermediate term, and hopefully much longer term trading, that I know what I should do. Conversely, with the intraday stuff, I get sucked into way too many trades, and I'm working on that. And it's like what's Michelangelo say? And what's the Latin for it? Encara, empora, or something. I forget how it goes, but it's basically I am still learning, and you have to take that approach. And all these kind of going off on a tangent, imagine that, but it's all these people, they make you feel inadequate. All these people on YouTube that are selling their crap make you feel inadequate. I mean, some of them are doing like one guy was doing something. I'm like, that looks a lot like a moving average crossover. He's just making it like his secret indicator or something. But these guys make you feel inadequate. Believe me, we all have doubts. We all have fears, and that never goes away. It gets easier, but it never gets easy. And in one way it gets easier is if you're sticking with your core methodology. It doesn't have to be mine, but if you're sticking with your core methodology, that just gets better and better and better and better over time. And you learn during times like this, like Brian and I were talking about a second ago, you sit on your hands. But never forget, the only reason to put on a trade is to make money. Now, I had a client a while back, and I've said this 1,000 times, and he calls me one day, he goes, man, my trading just got a lot better. I'm like, well, what are you doing? Because I'm willing to learn, old dog new tricks, right? And he says, well, my doctor quit at the hospital, so I'm working literally day and night, but I'm no longer trading like a crazy man. He's waiting and taking opportunities when they present themselves. And that's why I'm always preaching, busy traders make good traders, because they're so busy saving lives or defending bad guys or fixing automatic transmissions that they don't have time for mediocrity. Who was it? Bourdain once said, God, I'd hate to see that guy go. I liked him a lot. But he said mediocrity is the greatest sin. And guess what? I worked on a piece just on that too. So I need to publish some of this stuff. And I agree. So you want to trade the best, I know it's cliche, and leave the rest. And again, it should be that F yeah feeling, the F yeah moment. But the more you observe the market unnecessary action, looks like I'm having trouble reading my old writing here, that you take, okay, the more you observe the market, the more unnecessary action you take, and the more likely you will put yourself into a state of regret. And a lot of what we do is regret management. And the way you manage your regret is don't put you into that state of regret. It's like, yeah, drop an F-bomb, like, I'm human. I come in and see KGS down. It was making all-time highs. I'm thinking like, oh, we're going to hit the profit target tomorrow. It looks so damn good. Look at me. I'm Big Dave, And so, sounds like the Frenchman from Monty Python. But anyway, and then I come in, I see it down. It's like drop an F-bomb. It's like, okay. I actually saw on Facebook it was down before I actually checked the market. But anyway, you don't want to micromanage yourself out of trades. You don't want to make trades out of boredom, okay? Or the recreational trade, as I often call it. And somebody said this a while back, and I don't know who to attribute it to, but it makes a lot of sense. You want to be as close to the market as you need to be, but no closer. So again, like I said earlier, when I used to get pissed off at my core position trades, walk around the block, I was obviously watching them too much during the day. Number 12, I will accept what the market is willing to give. Amen to that. Now, you have to realize you don't have any control over the markets. You only have control over yourself. So in trading, you have none. Now, and I've done complete presentations just on this, but our whole careers outside of trading, right, are based on the fact of having control. This Dr. Flynn I was just talking about, his control is being able to keep the patient alive, doing surgery and do a proper surgery on that patient. He has to control the situation, okay? The automatic transmission mechanic has to control that situation to get that transmission running again, okay? But in trading, you don't have any control. And as my brother from another mother used to say, Mr. Douglas, all it takes is one a-hole to screw up a perfectly good trade, okay? Think about the a-hole that said, our AI is better than your AI the other day, okay? And that pissed me off, truth be told. And it's like, okay, well, let me go check out your website. I'll download your AI. It's free. Let me play with it and see how great it is. Oh, the website's down. Okay, so you have the greatest AI in the world, but you can't keep a website running? I don't know about that. Anyway, I digress. So the lack of control, it kind of reminds me of the serenity prayer, and I grabbed this from Trading Full Circle. God grant me serenity to accept the things I cannot change, courage to change the things I can, and the wisdom to know the difference. Now, one of you guys sent me this, and I put it in Trading Full Circle. This is from Pearls Before Swine. And you don't want to pray the genius prayer. Now, if I'm trading really well, I feel like I'm, truth be told, maybe I'm praying the genius prayer sometimes. Do you ever pray just a genius prayer? What's that? God grant me the courage to change the things I cannot accept, serenity to accept the things I've changed, and the wisdom to know I'm different. You're going to hell. You try using it. Don't try using it. You don't qualify. All right, number 13. I will do a serious pre-mortem on every trade. And then I added the word emotions pre-mortem, okay? So you kind of have to, not to get all touchy-feely on you, but you need to get in touch with your emotions, okay? You cannot suppress your emotions. That cannot be done. That's neurology. You need emotions to make decisions because a decision has a consequence, and that consequence has an emotion attached to it, okay? Every decision, even a minute decision, has an emotion. I had to eat a little bit before coming in here. I get a little sugar low, especially now I'm working out like a dog. And so it's like I need to think about what I'm going to eat. Okay, I can't eat something greasy or too salty or whatever because I'll be in here drinking a lot of water or burping or God knows what. It's like something as stupid as a little snack right before you go live on a webinar. You got to think about that. But anyway, make sure you do the pre-mortem. It's like, is this trade an yeah trade? Okay, is there persistency? Is there acceleration? Okay. Does the stock trade cleanly? Is a sector backing me up? Is the overall market backing me up? Am I feeling an yeah? And one thing you do, I've talked about this quite a bit, is like, is current Dave gonna piss off future Dave? Okay. So it's a little quirky, but time travel, okay? And imagine how you're going to feel if that trade fails miserably. And you could say, well, you know what? Fails miserably. You can say, you know what? Everything was there, okay? The persistency, acceleration, everything I just said, trades cleanly, sector backing you up. Now, many times, and I call this foresight and hindsight, okay? Because you knew going in, because you ever get stopped on a trade, you go, gosh darn it, and you probably say much worse, I knew I shouldn't have taken that trade, okay? If you find yourself saying that, then and you're being truthful, then obviously you didn't do a pre-mortem, okay? I know it's all much easier said than done, but it can be done. I promise you. Now, obviously, you want to do a post-mortem on every trade, not to be confused with Post Malone. So what's a post-mortem look like, okay? Did you really pick the best and leave the rest? It's amazing how much clarity you're going to have. If you back that chart out to day one, okay, the day that it triggered, or the day before it triggered, even better, and you're like, I really didn't look that great, then you didn't pick the best and leave the rest. Now you go through these iterations over and over and over, and you get better and better and better. Steve says on YouTube, I do something similar for stocks closing higher on above 50-day volume at 6-month highs. Okay, that's pretty cool. I'm not a huge fan of volume, although somebody told me not too long ago, well, it's probably 2 years ago, but that they look at volume buzz on telechart with their stocks. If like stocks making new highs and there's volume buzz, those are two of the triggers. So maybe that's something worth looking at. I'm not a huge fan of volume. Volume can go both ways. Or you're getting true volume, and there's a lot of issues with how do you know who's buying, who's selling, and there's a lot going on with volume. So that's not to get sidetracked on that, but I'm not saying that's not conceptually correct. I don't do a lot of volume stuff, but I think that maybe there's volume buzz, maybe there's something to that. Okay. Anyway, now one thing I've done again, complete last week at Bandcamp, complete presentations on is you need to work hard to separate luck from skill. And if you figure that out, write me a letter. But when you make money on a trade, especially a mediocre trade, okay, if you got lucky and you think it's skill, you're in for a hurting down the road, okay? And that's the thing. It's like you're going to get your is it just desserts or your payback down the road sometimes for bad behavior today is going to really hurt you down the road, especially if you get rewarded from that bad behavior. Annie Duke wrote a good book, Thinking in Bets. I haven't gotten into her book of decisions. I tried. Maybe I need to get back into it. I'm not into kind of the workbook type of format. I like to read and kind of think about it on my own. But in Thinking in Bets, which I'd recommend you read, go to davelandry.com/books-to-read, and it's listed there along with everything else I'd recommend you read. But she talks a lot about a good poker player versus a bad poker player, and she gives examples of the players and all. But it's kind of akin to, as somebody once said, like traders at the bar. The old trader at the bar is going to be like, man, I got my ass handed to me, or I did okay, or whatever. He's going to be kind of humble about the whole thing. And the new trader is going to be bragging about how well they did. And I think she was talking about, I could see his face. I can't think of his name off the top of my head. he could win the tournament, but at the bar, he'll be like, yeah, 3 games back. Boy, I did a stupid thing, and I'm not sure why I did that. Whereas, I guess it's like Hellsmith or somebody like that who's a little bit more boisterous would be like, yeah, I won the game. I'm the greatest ever. But separating luck from skill is very important, okay? The traders who aren't going to make it longer term do not know how to separate luck from skill. When they make money, they think they're smart, and when they lose money, they think they had bad luck, okay? Now, again, if you're thinking, what the hell was I thinking? That means you know what you're doing wrong if you find yourself saying that on a trade. And I would say raise your hand if you've been there, but I'm sure you've all been there, okay? Because I know I've been there. And these behaviors come back, okay? So you have to constantly manage them, and that's what people forget about, is because they think that you're going to have the epiphany, and that's why I did the Million Little Things series, and we'll pick up on that in a few weeks. But I did that because it really is a million little things, and you have to stay on top of these things and continue to do them. So if you're thinking, what the hell I was thinking, that you're on your way, okay? Provided you don't constantly say that, that's okay. What the hell was I thinking? That's okay. Learn from that experience. Again, those morning pages really help you to see whether you're becoming the definition of insanity, doing the same thing over and over again and expecting a different outcome. I have this little digital notebook, and you can put tags on your notes, okay? And I have one called TDOI, which is the definition of insanity. Like if I do something stupid like an idiot. I also have one for shame, and I did an ogre today. I didn't put it in the presentation. I probably should put it. It was like a 100-share ogre on something, R blocks, I think, RBLX. I know that, it was RBLX. And I put it on, and I was like, I'll get to the stops later. I'll get to everything later. And it shot up 2.5 points or 2.75 points for my entry, which would be a perfect little intraday trade, right? 2-3 points on a trade. That's pretty good intraday. And I missed it. It came back in, and I nearly got stopped out. So you got to be on top of all this stuff, I think is what I'm saying. Now, if you think, well, in hindsight, I just got lucky on that one, amen. Boy, you're really coming along, okay? It's like, boy, I should not have taken this trade. I know I made money. I'm going to thank the trading gods. I'm going to throw a couple of bucks in the plate or whatever. I'm just going to be very gracious that I made money on that stinker. Now, if you're thinking, well, I lost, but if I saw that same setup tomorrow, I'd take it a heartbeat. Amen. You're on your way. Okay, that's good too. All right, number 15. I reward myself for following the proper process regardless of the outcome. Now, this one, as I kind of alluded to earlier, kind of contradicts the only reason to trade, right? And the only reason to trade is to make money. And as I've said before, usually when I'm speaking in person, I'll say, why do you trade? Why do you want to trade? And I'll get a lot of answers, and sometimes third or fourth or fifth answer is to make money. That's the only reason. Why would you put yourself through all this hell? Seriously, okay? It's not like the YouTube gurus, use that term loosely, where oh yeah, here's my Lambo, I work 20 minutes a day, blah blah blah. I'm glad, not to be schadenfreude, but I'm glad a bunch of them that were all together in a little group, they got sued for $121 million for defrauding people. So that's good. That's good. So, but a whole new bunch has come along, so it doesn't matter. They're like cockroaches. Number 15, I reward myself for following the proper process regardless of the outcome. So this does not contradict the only reason to trade. You need to enjoy the process. And I forget who it was, John Z or Chris A CJ put a link to an article and I can get it to you if you want. I can put it in the comments below. Put a link to an article on enjoying the process. So you really do have to enjoy the process, okay? So yeah, you can make money doing this, but you better enjoy the process. And longer term, the process is going to make you money, okay? So the two are not mutually exclusive. So you say, why do you want to trade? I enjoy the process. Okay, that's a viable answer, but your number one answer is to make money, and number two would be enjoy the process. And again, you better enjoy the process if you're going to put yourself through this ringer. But it's worth it. Longer term, it is worth it. It's over the short term when it's choppy like this, it is not. Okay. And then it's even harder on me because clients are reminding me when things aren't going well. It's like, I know they're not going well. I have my own money on the line too. But anyway, you want to reward yourself for following the proper process regardless of the outcome. And Linda Raskey, in one of her videos, she talked about someone, and at the end of the day, he get together with his team, and it's like, how well do we do following the process? He didn't say, did we make money today or did we lose money today? He's like, how well did we do following the process? And I thought that was pretty good. As I often preach, the market could be a really bad teacher. Crypto heats up. Somebody new will come to crypto and they'll make a bunch of money. Kid in the gym, not to pick on him, but he's probably not watching tonight. He made 5,000 in one of these little shit coins. It was one that you had to he saw it on Twitter that was being pumped and dumped, right? And you had to put it in this wallet from this thing and do this. It had to jump through all these hoops to buy this shit coin. And if you got to do all that, I would say it's probably not a good idea. Oh, Kevin Bacon. I got you, Brian. But anyway, he went through all this trouble and he made $5,000. Well, he hadn't said a word about, he asked me how's the markets every day, and I tell him what's going on. It's choppy, whatever. But he's been awfully quiet. So I have a feeling that he might have blown up that $5,000. And that's because he got lucky and he wasn't following the process. Anyway, so you need to learn to love the process. In Viewpoints of a Commodity Trader, which I couldn't find right before I went live, I recommend you read the book. Get a paper copy because the older copies are valuable. And I gave mine away like an idiot, but that's okay. That's another story for another time. I bitched about giving away so much that Mike P sent me a new copy of the paper copy, the paperback copy. But anyway, great book. That's one of the million little things. Read that book. That's also listed on Viewpoints of a Commodity Trader by Roy Longstreet, and that's also in the books to read. He who seeks only silver will never be happy with silver. And I think that's how it read in the book. And then when I did a little research on that, that's Ecclesiastes 5:10, or a bastardization of it for sure. I love getting whacked. Please, sir, may I have another? I don't know about that. Nobody likes losses, of course. Now, if you did everything correctly, the trade failed miserably, then chalk it up to shit happens, okay? I tell the story all the time. I was at the grocery store years ago, and something happened. And I looked over at my wife, and I'm like, well, shit happens. And large black lady behind me is like, sometimes twice. And it was just really funny. So, hey, watch your phraseology. How can I get better versus why do I suck? Okay. So if you lose on a trade, which you will, go in and say, okay, I didn't pick the best or whatever. How could I get better? Maybe I need a checklist like a pilot, okay, of all the things I need to do, like put the landing gear down when you land, right? Maybe I need that list, okay, versus why do I suck? And, the markets will beat you up enough, and people around you beat you up enough. No need to beat yourself up unless you really deserve it, okay? Now, do constantly look at everything to make sure that you are following the proper process, okay? Earlier today, the proper process would have been for me to put in the IPT, initial profit target, and put in that trailing stop. I was like, oh, okay, I'll do that. And, oh, what's over here? ADD kicks in, something pulls me away. And before I know it, I turn around, I'm like, crap, within like 2 minutes, it shot up 3 points. So I wasn't following the proper process. Now, waiting patiently as I preach is a big part of the process. Yeah, I know. I think it was you, Brian, that brought up that once before. I'm not sure why you bring that up so often, but teach his own, okay? Nothing wrong with that. Not that there's anything wrong with that. No, I didn't realize it was Kevin Bacon getting spanked in Animal House. We cover a lot of ground in here, don't we? Anyway, waiting patiently as I preach, this was another one of my shower thoughts I put in the last minute, is a big part of the process. And it really, really is. And I think I've said this 1,000 times, and I don't know what's my most recent record, but I remember once I went in and I noticed in the trading service, I went 53 days, and there were recommendations at that time, but there were 53 days, okay, where nothing triggered and it had very few recommendations. So I thought that was pretty good. Mark Douglas talks a lot about the knowledge gap, and it was, I think it was in one of the YouTube videos. I couldn't find anything on it in his books, but it's worthwhile to research that. And he basically says if you do to trading, you think that if you lose money, there's a knowledge gap. There's something that you don't know, and there's something that somebody else knows. And if you only knew that, then you'd be great. Well, as I preach, it's a million little things. And if you've been around for a little while, especially if you're trading one pattern and you're doing all these things like looking for persistency, acceleration, all these things I preach about, okay? And ideally the sector backing, ideally when the market's trending too, draw your big blue arrows. It's not rocket science, right? If you're doing those things and it's all conceptually correct and you're using stops and taking initial profits and all that other good stuff, then you know enough to trade, okay? And don't beat yourself up and feel like if I only knew more, because that knowledge gap can lead you, as I've said in presentations prior, can lead you on a grail hunt, which does not exist, unfortunately. So make sure you trade through a variety of conditions so you don't fall into that knowledge gap. Okay, let's shift gears. Take a look at crypto. Crypto, as I often preach, crypto goes through these cycles. In fact, I actually kind of gave up on crypto for a little while, not intentionally, just because there was nothing there. And that's one of the million little things. Always do your homework, even when there's likely nothing to be done action-wise. But anyway, I picked up, what trade was that? Was that an XCN? Yeah, I think it was XCN, which I'm in again, and it's actually losing this time. But I picked up XCN back here doing the webinar a few weeks back, which was kind of fun. And what I was saying then was, well, I backed off on crypto because there wasn't a whole lot happening, and I probably didn't do my analysis that day like I should. Now, as I preach, when things are doing well in crypto, sometimes you can just buy the strongest ones. Right now is not one of those times. There's one or two taking off here or there. Right now, I think you're better off trading like you would the core methodology. Now, like I said, I'll just buy these strong ones when they're doing well. But right now, like something like this, you can see this is a pullback. This is one I played a while back right here. I played this one, shot up, came right back in. But before this action here, it's got, okay, that looks like a pullback. So I've got an alert in here and I'll take this. That's kind of the mode I'm in now. The great thing about crypto, as I often say, especially if you're learning how to trade, is the bull bear cycles. My cage just slipped down, my kunas. I just said bear. The bull bear cycles. The cycles are so fast. You go through these bear markets, you get them out the way, and then you get a bull market. Unfortunately, it only lasts a week or two, and then you're back to a bear market. But they're a lot of fun. Don't bet the farm, but if you want to learn how to trade, maybe 50 bucks in each one or 100 bucks in each one and profit take it. And, it might seem, inconsequential or like a tiny amount. And that's how trading should feel if you're newer to trading or trading new markets or trading new methodologies. Anyway, it doesn't take a rocket scientist to see that Bitcoin is going straight sideways for a while. Not enough time tonight, but if you plot the Landry light and bow tie proper order and all those other good things that I like so much, you'll see that it's going into chop mode, switching back and forth between green, none, and red. So again, it doesn't take a rocket scientist. Just one thing I like to do, like I said, is just draw a horizontal line on the chart from, where are we and where are we back in time. I didn't do that perfectly, obviously, but you get the idea, okay? Bitcoin hasn't gone anywhere since when? Way back in, when is that? Last year, last November, okay? All right, you guys want to look at anything? So Bitcoin, nothing going there. Ethereum looks even worse. I don't even know why I don't have it up anymore. Let's see, Ethereum. And then notice Ethereum, the 30 EMA is your best friend and many markets. So Ethereum versus dollar has been in really bad shape. And Ethereum and Bitcoin is much uglier, or at least last time I looked at it was much uglier. Yeah, okay. Look at the Landry light, highs less than the moving average. This thing has not touched its moving average since the beginning of the year, and it just kind of got barely above it and came right back in. Obviously, you wouldn't want to buy it just because it barely crossed the moving average. All right, anybody want to talk about any shit coins? SHYT, going once, going twice. All right, let me shift gears. We'll go through markets really quick. If you want to look at any individual stocks, let me know now. Be happy to take a look. All right, let's just take a look at this market real quick. And Brian was saying it's choppy. Yeah, it is choppy. It's up, it's down, 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 it's up. Okay. You can't trade that. Okay. Don't think you can. Oh, I'll just trade an oscillator. Well, good luck with that. Okay. As soon as you trade an oscillator, oversold becomes even more oversold. And before you know it, you're in a world of hurt. Moving averages are in uptrend proper order for what it's worth. I wouldn't get too excited about that. We are less than 1% or right around 1% or whatever. I forget exactly what it is. Less than 1% away from all-time highs. So we could give the market the benefit of the doubt, but there's no need to trade it until it breaks out and stays there. Nasdaq Composite, decent day there too. Longer term, still in an uptrend, kind of hugging that 50. Moving averages are still in uptrend proper order. Not much Landry light. We got one bar of Landry light on the 50 and the 30 EMA. So not a whole lot to write home about there. A little sideways. Rusty 2000, still all over the place. Still looks ugly longer term. Still looks like a top is in place. Yeah, the bow ties are coming together here, but I wouldn't get too excited about that just yet. And then as of today, we're back below that 50 once again over today's action. Some areas are doing okay. This is internet, just off of all-time highs. Social media, SLCL, banging out some new highs with a little bit vigor, so that's a good thing. Gold, the commodity, just banged out new highs yesterday, just beginning to pull back a little bit. And gold stocks have woken up finally with the underlying commodity, and they're looking pretty good. So we could see some setups there fairly soon. Some of these areas that have been performing really poorly have begun to wake up a little bit as of late. Notice the bow tie back to the upside, like I said last week and weeks prior. I like a bow tie coming off of like 10-year lows or multi-year lows at least, as opposed to these mid-level trades, but it is a sign of strength and it is a good thing. Today, notwithstanding, I whacked a little bit. So if they come all the way back into the moving averages, slash a little breakout here, then all bets are off, but they are beginning to improve. Again, no need to run out and buy them just yet. Wait for follow through. Yeah, if you have any stock picks, feel free to put them in. So software kind of rolled over, but now it's kind of coming back. It's kind of the story of this market. It's dies out and comes back. I wouldn't buy it just because it's coming back, but it has improved. Defense is bumping up against these old highs. You'll see this as a reoccurring theme. I think financials look like this too, and quite a few other areas. They look good, don't get me wrong, and they've gone up in more recent times, but they are failing to get past their old highs with a lot of vigor. Yeah, there's financials, you can see. Now, financials actually did make all-time highs today, so that's a good thing. And if you're looking at the media general banks, they banged out some new highs, and see, they got past this double top, so that's a good thing there. So maybe little by little, we'll see more and more improvements in the market. I think major drugs, I don't know if I mentioned them earlier, also kind of bottoming out, like biotech. Cloud computing, this is another one of those potential double tops in the works, but for now it looks okay. As long as it's hanging around that top, then it's not a top, right? If it implodes from it, then yeah, it's a top. And by the way, as I say ad nauseum, when the market is at or near new highs, a big up day looks like it's off to the races, looks like a brand new bull market, and a big down day looks like the beginning of the bear market. So you got to be really careful not to chase your own tail when the market is going sideways. Again, plot your horizontal lines or draw your horizontal lines. Bonds have been improving as of late. Good to see them stop going down. I wouldn't get too excited just yet, but at least they're getting a little bit of bid in more recent times. Energy is a bit of a bummer. See, energies really weren't trending, but the underlying commodity was when I saw that oil setup, that oil service stock setup, and that's why I took the trade. But here's the energy is a bit of a bummer, selling off fairly hard. So USO for crude, you can see crude not that long ago was doing really well, okay? Trying to break out and looking pretty decent. And somebody said, like, how could I pick a stock in these conditions? Well, take a look at like KJC, KGS, the one we're long. Notice that it trends, when it trends, it tends to persist. I mean, for an energy stock, this is unusual to persist as much. Notice that it accelerated higher, okay? And notice that this trend here is much sharper than this trend here, okay? Longer term, at least, if you're looking at forget about this one for a second, look at this trend and this trend, okay? Connect the trend lines below the lows. And it's, for the most part, accelerating higher. The other thing I liked about it was it had this big old fat knockout bar. Usually with a knockout bar, a textbook TKL that we talked about last week at Bandcamp, if the market comes all the way back up and makes new highs and triggers, then you possibly have a bona fide longer term trend resuming. If it doesn't trigger, then it's potentially a top. Like if it implodes the next day, I'd say 8 out of 9 times, or maybe 7 out of 10 times. I forget the exact, I don't know what the exact math is, but it's a lot. The textbook TKO doesn't trigger, a market implodes and then keeps on imploding, and that's fine. No capital gets put into harm's way. So I think that's pretty much it. There's some sectors that have topped out and still look abysmal, like home builders, semiconductors. I like the semiconductors to go up, and I like the market to go up. I like the semiconductors to confirm the rally in the overall market. Semiconductors have improved a little bit as of late. As I've been saying ad nauseum, when you drop below a range like this, obviously it becomes overhead supply. The quicker you get back through it, or if you can get right back through it, then you sometimes dodge a bullet with that. But if it has a hard time getting through it, the longer it has trying to get through it, the longer it takes to get through it, the more significant it becomes, because people begin to see that as resistance, and anybody who bought in that range starts looking to dump, like, well, it's not gonna get out of this range. I might as well get out at break even, okay? And that's human nature. So that's what's going on with semis. I should like to see some improvement there. All right, any individual stocks? I know there's a little bit of lag with YouTube, so I'll filibuster just a minute, and feel free to punch them in now. I know we talk a lot about stocks and stuff during the day. There's been some IPOs lately. MTSI. No, is it MTSI? MSTI? MSTI. I'll get them all. I don't know if my screen's on. What's that IPO, John? Are you here still? MSTI. Nope. Nope, that's not it. Okay. Okay, LO position at 25. Okay, Harry. Okay, LO. Yeah, this was one I owned a while back and got knocked out of, and then I looked at it today. It's on my minimalist. I'm like, oh, geez. I entered a position at 25. Okay, what was your thinking? Now, see, I don't see a setup at 25, but that it broke out, so I'm not going to argue with that. Nothing wrong with breakout trading. When conditions are doing really well, I think you could breakout trade. That's what I do in the crypto when conditions are well. Right now, we're in a bear market. Okay, check back often. It's like, I wish I had enough energy and time. I think I would say, crypto bear market, leave it alone. Crypto bull market, let's go in. But yeah, I'm not sure why you got in, but that looks good. I would hang on. Make sure you're taking some partial profits on that one. Okay, but that looks really good. Yeah, I was kicking myself in the butt on that one. Okay, yeah, nice job on that. Even though we're not in a breakout market. Okay, since semiconductors are in everything, wouldn't that make SMH? Wouldn't that make SMH a leading indicator? Well, one of my friends years ago, a trader friend, said that I was very astute, if that's the word, or I was impressed. There's Dow theory, right, going back 100 something years, okay? Well, Dow theory says that the transports need to confirm what's going on with the major indices, and their thinking there is, if the transports are doing well, it means that goods are moving around the nation. Well, fast forward 100 years or so, and his point was that the semiconductors are like the information superhighway, so to speak. Okay, so and as Brian pointed out, semiconductors are in everything, right? So yeah, that's probably why the two should confirm each other. I don't want to confuse the issue with facts too much, but yeah, I agree with you on that, and that makes a lot of sense. MSTR, I always get that one mixed up. MSTR, is that right? No. MTSR. MTSR, that's the same thing I did. There it is. So this was a buy at B that triggered today. And thank you, John, for bringing this up. John Ross is our resident IPO expert in Facebook. And he brought this one up. Dave Landry's trend traders, but you have to be at least a gold member of DaveLandry.com to participate. But anyway, here's a pattern: bar 1, bar 2, bar 3, bar 4, and bar 5. I did go long, FYI, on this one. So this is college fund worthy. I would, if you got grandkids, put all that college funds in this, or kids, That's one of the things. You ever watch these Senate hearings? It's like, I like to kill Hitler. And it's like, you said you liked Hitler. It's like, no. You're taking it out of context and leaving the word in between. Anyway, so here's the simplest of all patterns, right? You just buy the 5-day closing high. A couple of caveats, not enough time to get into them all, but range and usually below 30 is my cutoff on that. All right, going once, going twice. Any stocks? Well, as usual, I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule. Let me know in the comments, and you guys and girls, let me know on Facebook. You want me to bring these shows back to the daytime? Would that work better for you? It might keep me away from the screen, and it probably would save me a few $1,000s a week. Anyway, anything unanswered, DaveLandry.com. Everybody else, bring it up at Facebook. I can't thank you people enough for being here tonight. Thank you so much. Everybody have a great weekend, and I'll see all you guys again and girls in Facebook tomorrow. Thank you so much, and may the trend be with you. You're welcome. You're welcome.